is it just some fluke to say, yeah, oh yeah, it's kind of weird, but there's a sense in which gold has been in a bubble for centuries. And yep, if everybody just mass adopts Bitcoin, what's going to happen? Again, we said people are in it for speculative reasons in the beginning. Prices are going to explode, but then at some point they have to start tapering off. And then the cynics say, oh, everyone's just going to dump it. It's going to go back to zero. But I don't think that's what's going to happen. I think, yeah, some people might get out of it a little bit, reduce their holdings or whatever once they see that the price appreciation slows down. But at that point, Bitcoin will have grown into what the original vision was. That if everybody or just about everybody owns some, well, then now it is the perfect good to settle financial transactions.
Welcome to InFi, the future of finance.
Hey everybody, welcome back to the InFi podcast. Today I'm going solo, and there's a sense in which we're going back to basics, and it's fitting because it's the one-on-one episode number. But on the other hand, I bet I'm going to cover some things that many of you have never considered before. All right, so again, it's this weird blend where the things I'm going to be saying are almost simplistic, but yet things that are very important for you to think through if you're interested in Bitcoin. So let me say at the outset, even though I think we have the standard disclaimer, at least on the outro of these episodes, I am not here giving financial advice. It is true, I personally am very bullish on Bitcoin. Most of the people at our company, perhaps all, are. Certainly, we as a company institutionally are big fans of Bitcoin, but we're not here telling you go buy Bitcoin. I'm just giving you my analysis as an economist to help you understand this asset, because it's an unusual one, right? That it's a money-like asset, and yet people are investing in it for speculative purposes, or at least many people are right now. So there's a lot to unpack there. And also, just to anticipate a bit, there's almost a paradox involved where people who think Bitcoin is going to zoom up want to get into it now to be able to benefit from all that price appreciation. And a lot of Bitcoin enthusiasts are telling others, like, hey, you should get in on this. And, sometimes they'll say things like, have fun being poor, to people who are cynics about Bitcoin. And so there's this idea that, oh, if everybody just got into Bitcoin, we'd all be billionaires 10 years from now. And so it seems like, well, is that possible? Like, does that really make sense? How could that be? How could everybody just piling in all of a sudden give everybody physical mansions just because we all own some zeros and ones? That seems odd, right? So that's the kind of thing I want to unpack in this episode. But before diving into those considerations, let me start by just summarizing some of the recent news items in case it's on your radar. Specifically, the Trump administration has been issuing a bunch of executive orders and making other policy changes that are extremely crypto-friendly, to put it in a certain way. For example, just to summarize some of them, on August 7th, they released an executive order that was to ensure fair banking for all Americans. And the gist of it was, hey, under the Biden administration, there were people who were debanked for ideological reasons or because they were operating in areas that the administration did not want to favor. And so debanking was a way to kind of exert control over those people, and that's going to stop. So that's what the point of this executive order was. So again, beyond just the plain text of it and the superficial statements, which seem pretty straightforward, that was actually very bullish for crypto or blockchain more generally, development in the United States, because as we've been reporting here on this podcast, and I'm sure many of you have heard from other sources as well, that things like Operation Choke Point and 2.0, we're getting more and more information now that wasn't just anecdotal, like that really was a systematic effort. That people, I personally know someone who was big in the Bitcoin mining sector, owned warehouses full of computers that were mining Bitcoins, was completely legal, compliant with every sort of regulation and tax law and whatnot that you could want, and yet had trouble getting a business checking account. It was just weird things like that. And just lots of people were reporting They didn't get a letter from anybody. They didn't know what the problem was, but it just seemed like they kept having bad luck when it came to banking, the conventional banking. So the point being is there were lots of ways that the Biden administration could discourage innovation and people building in that space, at least in the United States, without coming out and literally making it illegal. And so this executive order is taken to mean that we're not doing that anymore. Like, this is officially, we're putting it as a policy that punishing people by interfering with their ability to just engage in conventional banking because of ideological disagreements, or just we have distaste for what they're doing elsewhere in their business life, like that. You can't do that. So that was taken by many to be, again, a green light. A huge one, that there was another executive order that instructed the Department of Labor to ease restrictions on 401ks to allow for greater flexibility in investing in so-called alternative assets, which also included crypto assets. All right, so it's an executive order, right? So I think to really make this solid, they would have to update various legislation, but still, it's a very promising sign. Just other news. There's also the crypto policy report that the White House issued recently. Had a bunch of stuff in there, but among other things, was giving guidance that the SEC should allow Bitcoin spot ETFs a greater ability. It was for redemptions in kind, right? But again, just kind of loosening things up and just encouraging innovation and not having what people in the industry would view as somewhat arbitrary restrictions on how they could conduct their business, right? And if their customers wanted something and they wanted to provide it, just to not have what seemed to be arbitrary prohibitions in place, many of which were somewhat anachronistic, right? Like that could have made sense in an earlier time, but now with the new technology and the types of assets and innovations that developers in this arena want to bring, that some of these rules were just, they seem counterproductive. It's not like by relaxing them, all of a sudden you're going to open up investors to this huge new type of risk or something. Like, it seems like a lot of these things, it really serves no purpose. And so the Trump administration looks to be fulfilling Trump himself's promise when he said that he wants the United States to be the AI and crypto capital of the world. Like, they really are coming through with various executive orders and policy decisions that seem to indicate, that wasn't just rhetoric. They really are doing this. It just is another news item that caught my eye that Metaplanet added 463 Bitcoin, bringing the market value as of the news blurb that I read. They hold some $1.8 billion, just that one institution. All right. So all of this stuff is clearly making the institutional ownership, either directly or through proxies, of Bitcoin and other crypto assets, it's making it more mainstream. And so what I think is going to happen here, and this isn't a very difficult thing to project or to say, is that there's going to be a snowball effect, because up till now, and it's been weakening over time, but it's still, the stigma is still there. If somebody is trying to come up with the epitome of, what's a risky thing to invest in, they will say Bitcoin. Like that's for a while been sort of the go-to thing to say something that is plausible. In other words, like you would say, go to spend money on the racetrack. Like, that's clearly a bad idea, right? Because in general, gambling's risky. Certainly going and putting it on the craps table at Vegas, that's definitely a bad idea, right? Because the house has an edge, right? Whereas the racetrack, you could argue, well, if you know how to pick horses, but okay, you get the point. But I'm saying, in terms of things that it's not prima facie absurd, but yet just, wow, that's really risky, it has been Bitcoin has been the go-to thing. And because of that, many institutional asset managers literally were forbidden from directly owning it. And that's partly what's given rise to, like, Michael Saylor and his strategy of, coming up with a way that his company directly acquires the Bitcoin, but then issues convertible bonds. And so these other money managers with their charter and whatnot, they're allowed to own the convertible bonds. They just can't own Bitcoin. And yet the value of the bonds is obviously tied to the value of the company because it owns the Bitcoin, right? So there's lots of innovations like that occurring and that have occurred because of the status of companies that want to have exposure to Bitcoin, but yet can't literally just hold it directly. And so there's all these things arising because of that. But I'm saying over time, those are going to get relaxed, right? Again, that, there's the ETFs are there, the relaxation on the 401k rules and so on. And I'm just saying it's going to be gradual, but I think steady, where the stigma of Bitcoin being this really risky, volatile asset is going to fade. And also, too, it won't just be a sort of desensitization, sort of like if somebody from 1980 saw television today, they would be astonished at the cursing and the nudity and whatnot. And it really is just objectively has more debauchery today than it did in 1980. Or the supermarket, the stuff that you see. I can remember when the Sports Illustrated swimsuit issue, they wouldn't just put it out on the racks like it was in cellophane or something. That's not the right word, plastic. And it was kind of behind something. Nowadays, that's pretty tame, right? The cover of People probably has something more racy, right? So there's that element where we've just kind of gotten used to it. But I'm saying that's not merely what I'm saying. I'm saying more than that. That as more institutions pile into Bitcoin, that will make the price less volatile. So in the beginning, there's going to be rapid price appreciation. Okay. And so that's still going to continue for several years, I think. But at some point, as once you get saturated and a bunch of the big players that right now are just starting to get in, and once they all come in, the price is going to explode, but then it'll taper off. And then as more and more people own Bitcoin, individual allocation decisions on the margin are not going to have that big of an effect on the world price. Whereas right now, it's still the case that a few big players, if they just decide they want to engage in profit taking or something, and that can push the price down significantly. Okay. But I'm just saying, as more and more institutions begin saying, oh, maybe we can get some exposure to this too now. Like our charter has been revised, or, because now there's this ETF we're allowed to get into. We're not going to hold it directly, or whatever, all these different things that as more and more people pile into it, that will actually mean any individual decision to buy or sell doesn't affect the global price as much as it does right now. Right. So that means the volatility of Bitcoin, I think, over the next 10 years will be lower than it was over the previous 10 years. And for that very reason, then, institutional money asset managers will be more willing to gain more exposure to it. Okay. And so you see, it's like a snowball effect. That as more people, they're dipping their toe in the water and like, well, I think the risk return is okay now, whereas 5 years ago it was too risky. But now this is more mainstream. I don't look like I'm a lunatic if I get into this stuff. And if it does go down, my shareholders are not going to think that I did something insane. They're just going to say, oh yeah, well, it went down this quarter. A lot of people are holding Bitcoin now, right? So I'm saying is that mentality spreads further and more people dip their toes in, then that will suppress or dampen the volatility. And so then they'll all pile in even more, right? And so you'll get stronger price appreciation and lower volatility, right? So it's just a self-reinforcing process. So what's the end state? It can't be that Bitcoin just keeps going up 100% a year forever, and that more and more people just keep piling into it, right? Because logically, at some point, every single business, every single household on planet Earth would own some Bitcoin, right? It might be a very small amount, but logically, that's the end point. Like once everybody owns it, then there's not going to be further price appreciation from adoption. Okay. I mean, even there, like you could quibble and say, well, it's one thing for a person to have one Satoshi, But then as they get more comfortable with it, they could load up and, get more. So I get that. But ultimately, in case you're just getting mixed up in terms of the saying, well, at any given time, there's just a certain number of Satoshis. And then in the long run, there's only going to be 21 million Bitcoins, period. And so at that point, won't everybody, the people who hold it, won't they just be rearranging the fixed stock? And yes, they will, but you can still get price appreciation from adoption, right? So let's just fast forward. Let's say there's the 21 million have already been mined and 20% of the world's population holds it. Okay. And then people can say, oh, but is there still room for price appreciation from further adoption? Yes. As more and more people want to hold it, what's going to happen is they will bid the price up. And then the 20% who are holding all the Bitcoins at that point will engage in profit taking, right? As the price keeps zooming up and up, some of them will reduce their holdings measured in Bitcoins, maybe not in, if they're still pricing in dollars or something, not in dollar terms, but they will sell off some of their coins to allow them to move to other people's hands, right? And so I'm saying that if there are originally a bunch of hodlers, it might take a large price appreciation measured in government fiat currencies to get at least some of them to say, I know I've been hodling for 18 years, but Bitcoin now, I can go buy an island if I just sell 1% of my holdings. I think I will do that. I'm not going to be violating my motto of never sell if I just take profits this one time and I'm going to sell off 1% of my holdings and go buy a private island somewhere, right? I'm saying if it's like that position, I don't care how much of a hodler you are, at some point people are going to realize, what is the point of doing this if we literally never sell? At some point, you got to sell some of it in order to reward yourself for your foresight. So through that process, then the existing stock of Bitcoins can get transferred around into various people's portfolios. And as more and more people want to hold it. Okay. And so I'm just, talking about the actual layer one Bitcoins or Satoshis, but also too, as there's claims on them layered on top of it, people might be holding those as a proxy. So, that's the sense too in which indirect ownership of Bitcoin can spread rapidly, even if there is just a fixed stockpile. Okay. So that's how that works. I did a back of the envelope calculation in, I think it was October or November. I think it was October of 2024, where I just did a back of the envelope ceiling on Bitcoin's price appreciation. And what I did is, in terms of today's dollars, I just was showing what would happen if just everybody is holding Bitcoin the way that right now they hold conventional money, in terms of their respective government issued fiat currencies. The number, it was a very crude approach, but I just wanted to get a ballpark. And I came up with 160 trillion, right? So that, in other words, I could very plausibly see in today's prices, if there was mass global adoption to the point at which everybody's holding Bitcoin, that to the same degree that right now people hold cash, then, and by cash, I also mean checking account balances and stuff like that. I just mean literal pieces of paper. I came up with said, you could arguably see Bitcoin's market cap right now being 160 trillion compared to right now, as I record this, I just checked, it was 2.38 trillion. Right. So when I say there's a huge way more for Bitcoin to appreciate, you get a sense of what I'm talking about. That's realistically, I think, what it could do if Bitcoin lives up to its potential, where people think this really is the next generation of media of exchange or assets that provide a great store of value that can be easily transferred. You can call it a money-like asset. Okay. Incidentally, depending on the time frame that you think that appreciation, if you do think something like that's coming, would take, that can tell you how rapidly you think Bitcoin will appreciate over time. Because if I say, oh, right now it's got a market cap of 2.38 trillion, I think it could go as high as 160 trillion. If I think that's going to happen next year, well, that's a pretty big 1 year price jump, percentage wise. But if I think it's going to happen by 2050, then actually compound growth, as I'm sure many of you know, is surprisingly powerful. But the flip side of that is even for a massive cumulative percentage increase spread out over decades, that actually doesn't imply a very big year by year one. So the numbers I ran at the time in that article, I came up with that I picked the future day. I think I picked 2050, but I could be wrong about that. But I think that's what I picked. And it implied annual real price appreciation of 21% a year on average for that whole stretch. So that's still phenomenal, especially if we're talking decades. And again, that wasn't the nominal price appreciation. That was in real terms, right? So that was like consumer price inflation adjusted terms. So that was sort of like how much the Bitcoin would appreciate over and above just the general rise in consumer prices. That's what that figure was giving you. But looking backwards, Bitcoin had appreciated like 105% per year on average over the prior 10-year period, as of when I wrote that article. All right, so that's what people mean when they say Bitcoin is arguably the most successful asset in the history of humanity in terms of the rapid and sustained price increase, okay, during its brief time with us. Okay, so let me just spend a minute here. I've done this elsewhere, but because even at this point, there is something of a, maybe not paradox, but a tension. That there's this weird thing, and I alluded to it a minute ago, where a lot of the people who are the staunchest, most committed Bitcoiners right now believe that, oh yeah, I just want to get in and just hold it, and I'm never selling. I'm just going to hold it till kingdom come. As opposed to, people fiddling with their allocations, the S&P 500, and I'm going to get some in AAA corporate bonds, and I just keep adjusting, and we reevaluate and rebalance every quarter. And Whereas a lot of the people who hold Bitcoin, it's a fairly simple strategy of, oh, I just go buy it, and then I'm just going to sit on it and just wait and ... profit. And so that can make sense from any individual's perspective. But then when we're looking at the macro economy and looking in the long term, it's like, well, again, that makes sense as adoption keeps increasing and more people become first-time holders of large amounts of Bitcoin. But at some point, again, you've encompassed all of planet Earth, or even if you haven't, at some point you bump up against the limits. Maybe there are some people in some types of institutions, they're just never going to buy it. And so the point is, once adoption stops increasing, tapers off, then what happens? It can't be just that the price keeps appreciating forever. And so the price increases at some point have to taper off. And then what happens? And so the skeptics, or the haters, let's call them, think, oh yeah, so once that finally happens, the bubble will have bursted. And then all the people who right now are owning Bitcoin just as a speculative investment, because they're buying now because they think it's going to go up, and it's the greater fool theory. Okay, so at some point, and some of them might be intellectually honest and humble enough to say, I'm surprised it's gone this far, but still, I'm sticking to my guns. And at some point, as you've run out of people to dupe into holding this useless bunch of zeros and ones or whatever you want to call it, then oops, you're like Wile E. Coyote running off the cliff. And until he looks down, he's okay. But then once he looks down, game over. Right? And so that's what they say. Oh, and then once it starts crashing, well, then everybody's going to want to get out. They're all going to sell. And then the amount of people on planet Earth who hold it are going to keep shrinking until, and there's like 8 computer nerds who now own all 21 million Bitcoins, and they trade for a tenth of a penny each. There you go. And it was just the biggest, most crazy, ludicrous bubble in human history that makes the Dutch tulips look like something that Walter Bagehot got into. Okay, so that's the theory, but that's too cute, right? Because you could say the same thing about gold, which a lot of these guys who think, Bitcoin, oh, it's intrinsically worthless. There's no fundamental valuation. There's nothing. By the same token, gold has been in a huge bubble for centuries, all right? That among monetary economists, and I don't just mean like modern Ivy League produced economists who don't like gold. I'm saying like Ludwig von Mises, for example, and his standard treatment where he just took it for granted that gold was the preeminent market's money, commodity money. His analysis was making it quite clear that a big chunk of gold's market exchange value was due to its monetary role. And that just totally made sense, right? That gold did have a floor value used in jewelry and for certain industrial applications and so on. But Mises said once people began to hold gold, not just as, oh, let me load up on my stockpiles of gold because I'm getting ready to make some necklaces, or if you're a dentist who uses gold fillings or something, let me just go ahead and stock up on that because I don't want to keep running out every time I got a new patient. That would explain, some level of the price of gold. But once lots of people around the world, are taking it and stamping it into coins, making it into bars that are stored in vaults and so on, and then much of the newly mined gold each year is directed into those monetary purposes, clearly that elevates the market price well above what it would be for the mere industrial and consumption purposes. Consumption meaning like to make jewelry and stuff, right? So if you're going to talk about it being a bubble, you can, but then again, like I say, gold has been in a huge bubble for centuries. So there's something odd here. So let me just take a moment to talk about two different types of assets, right? And then we'll come back to gold. So housing was famously in a bubble in the mid-2000s. So in the United States, for example, there was a speculative boom, and in real time, there were metrics you could use to assess whether home prices were rising merely because of fundamentals or if they were being pushed up because of speculation. So an example would be looking at the vacancy rate. And in between 2003 and 2006, the housing vacancy rate went up. Off the top of my head, I don't remember what the numbers were, but you chart the thing, it was clear. Okay, so even before the price crash happened, you could look at that, and some of us did. I can't remember if I did it in real time. I definitely, if anybody cares, I'll put a link in the show notes page if you want to see if I'm bluffing. In October of 2007, I published an online article for the Mises Institute saying the worst recession in 25 years, ? And I went through and showed why I thought housing was overvalued, and that based on my understanding of Austrian business cycle theory, I thought the Fed had blown up a big bubble that was going to burst. And based on how artificially low they had pushed interest rates during the mid-2000s, I said the last time it was this distorted was in the late 70s. And so I was saying, if you believe that the prior distortion during the boom gives you a hint of how bad the crash is going to be, then I said, we're in store for the worst recession since the early 1980s. All right, so I published that in October of 2007, which is 11 months before everything fell apart with Lehman going down and whatnot in the global financial crisis of September 2008. Okay, I'm just making a note. So at some point when I was doing all the analysis of the housing market, I definitely had that chart showing how vacancy, among nice newly built homes, was rising in the mid-2000s. But again, I don't remember if I had done that before the crash actually happened or if I just did it afterward to try to explain what was going on. But in any event, that was a clear-cut indicator that, yes, as prices were soaring in the mid-2000s, it wasn't simply that, there are a lot of immigrants coming in who have to buy houses, or a lot of people, maybe because they're getting better job offers or whatever, are moving out of their parents' house and buying their own place, or whatever. The divorce rate is up, and so people are splitting up, and they're now a couple that used to live in one home, now they each have to live in a house, right? So there's all kinds of things you can come up with to explain without looking at the data first as to why the price of housing could be going up rapidly. And it could just be due to genuine demand. right? Or flip side, there could be a bunch of local governments that passed more restrictive zoning regulations. And I actually know some people that they do think that was a big deal, right? That they think the price appreciation was due to fundamental factors because, population was growing faster than the authorities were letting new housing be built, okay? So there's all sorts of things you could explain. So my point is, just the rising price per se didn't prove there was a bubble and didn't even prove it was due to speculation, all right? However, one indicator that it was speculative is that, again, the proportion of homes that were vacant was rising through this period. Okay, so that meant there were people who were buying houses not to move into them or even to rent them out, but just to hold them. And so why would you buy a house just to hold it, to not even rent it out to somebody? Oh, it's because you're going to sell it down the road, right? That would be, or, maybe you're making improvements and you're going to rent it down the road, but clearly you're sinking your financial capital into it now because you think it's going to rise in price and that it's going to justify not just that you're going to get your money back, but that it's going to compensate you for the opportunity cost that you could have put your money in something else. Okay. So by the way, that doesn't prove that it was a bubble. That just proved that the increase in home prices was partly driven by speculation. Okay. So the speculators could have been right. Turns out they weren't, or I guess it depends on the timing. And you say, well, what did you buy in at? Some of them got out in time so they could say, yeah, I was right. People who came after me were wrong. All right. And what I mean by that is, for example, let's switch the scenarios. Let's say it really looks like the U.S. and Israel are going to go to war with Iran next month. And all of a sudden, global crude oil prices shoot up $50 a barrel. And you start seeing people around the world who have the ability to do this start stockpiling barrels of crude oil, right? And existing wells are running at maximum capacity, right? Because the global price of oil just shot up $50 a barrel, right? So everybody's just pumping like crazy. Then you say, wow, why the demand for oil really went up, right? Because everybody around the world who can produce oil is rushing and struggling to keep up with the orders, right? And you say, well, are people driving more? Is it changing the fundamentals? No, people aren't driving. In fact, at the high price, a lot of people are cutting back. They're carpooling. Airlines are reducing their flights and whatnot, right? Because gasoline and jet fuel now are so expensive compared to a month ago, right? So consumption is way down. Production is through the roof. So it's not due to fundamentals. What is it? And you say, where's all this excess oil going? It's like, it's going into stockpiles. For some reason, all these people are just filling their warehouses with tons of drums of oil, barrels of oil. Okay. And so so that's kind of like the analog of people owning houses and not living in them or renting them out. They're just buying homes and keeping them vacant. So that's the idea that people are buying barrels of oil and they're not refining them. They're not turning it into downstream products. They're just stockpiling it. Well, what are you doing that for? But because they think the price might be even higher next month. And so they're holding it for the price appreciation, right? Because they realize if a huge war breaks out in the Middle East, then that could interfere with supply lines and the global price of oil might shoot up to $200 a barrel. And so at that point, if you're sitting on a warehouse that you just stocked up, you're going to make a hefty profit. So that's the logic. So if they're right, and if there is a war, then they made the right move. Notice also, that's exactly what we want them to do, right? So this isn't just like, oh, wow, we got this bad war. And then on top of that, we got all these speculators who are gouging us and now making gasoline more expensive. No. In the scenario I just said, if there is going to be war 2 months from now, in the months before, what is the quote socially optimal thing to do is every oil producer around the world is pumping like crazy, and everybody who's able to is storing and stockpiling oil like crazy. so that when the war breaks out, the rest of the world can draw down on those accumulated inventories and ease the blow, right? So that's exactly what you want people to do. And also, the market gives the right incentives, that it's not just, you don't want to be doing that just if some guy shoots his mouth off and there's really not probably going to be a war. So you want it to be a credible threat. And so it's the people with their own money on the line that, they don't want to go and buy a bunch of oil and fill the warehouse. And if it turns out they were wrong, then they lost. So that's why the market in general is a very good allocator of resources. People have their own money on the line. Okay. So my point, which is going through that example, was to say, just because the warehouses are filling up with oil doesn't mean that the oil prices are in a bubble. Because again, if those speculators there, so there's definitely speculation, but it might be accurate speculation, in which case the future fundamentals will justify the prior speculation. That's the idea. Okay. So one final example would be like the stock market. Same type of thing. You can distinguish between a speculative purchase and one that's just consistent with the fundamentals, right? So with a stock, there's various ways you can evaluate it. An obvious one is to say, well, just look at the present discounted value of the expected stream of future dividend payments from owning that company's stock. And then that gives you an idea of what's the fundamental valuation. What should this stock be worth right now? And you might say, well, what do you do with a company that doesn't pay dividends? Even there, you could hypothetically come up with it, right? Like you could figure out what their earnings are and blah, blah, blah. And if they did pay dividends rather than just retaining them, how much could they issue? Because in the limit, if some company is just investing in other assets rather than just sending out checks to their shareholders, and that they're sort of like, accumulating their net assets that way, and the shareholders are just gaining if you own 2% of the company, and instead of them just sending you checks every quarter, instead they're going out and buying various assets so that your 2% of that mix, the mix keeps growing over time rather than just sending you the checks. That's kind of equivalent. And ultimately, they could just send it to you, right? That if for some reason people said, you know what, we really want to start getting checks, they could change the policy, right? So that's kind of the logic there, because it is kind of weird, right? If there's a company that doesn't pay dividends, it's like, well, why do I want to buy that stock? And you say, well, because the price is going to go up down the road. You say, well, but why would it go up down the road? Like if they have great earnings, the share price goes up. Why? If I'm not getting anything from that, if they're not sending me dividends and they don't tell us anything about them planning on ever sending us dividends, why do I want to own shares of stock in a company like that? I don't care if it has good earnings. So how do I benefit from that? And it's, well, because you get to sell it to somebody else down the road because the price will go up. You say, but why? There is this weird sort of self-fulfilling prophecy where, well, if everybody thinks the price is going to go up because there's a good earnings report, then it will. And then you're right. But I'm saying even there, if for some reason people stop thinking that, in the limit, one guy or one group of investors could pool their funds and go and buy the company. And then they would own all the direct assets themselves. That if the company kept having good earnings reports, investing wisely, that would be a good pile of assets to own. Okay, so like so with housing and with stocks, ultimately, there is some, quote, fundamental valuation involved that gives you a baseline on top of which you can lay speculative purchases, right? So people can see, yeah, here's what the long run sort of anchor price is for this type of asset, whether we're talking about a house or, because the house could be, you can think if I own it and I could rent it out to somebody. And so what's the present discounted value of the net rental income? That would give you some basis for saying what's the, quote, objective fair valuation of this house. Okay. All right. So that gives you some idea. And then, there could be speculative bubbles on top of that you might want to ride or not, but that at least gives you some framework. So the problem though with something like Bitcoin is, what's the baseline way to value Bitcoin according to the fundamentals? And, that's somebody like Peter Schiff is going to say, that's my point. There is none. It's crazy. The whole thing is just a bubble. The only reason you're buying it is because you think somebody else down the road is going to buy it from you at a higher price. That's it. Nothing. And so, again, just coming back to, you could say the same thing about gold. Let me just take a moment and go through. So in my book, Understanding Money Mechanics, I was explaining the origin of commodity money. And I was saying that, historically, there's lots of, I'll link to that too. It's the free PDF, folks. Understanding Money Mechanics. It's a good book. So I'm giving the history and saying, historically, people have held all sorts of things as money. There's seashells, there's cattle, wampum, tobacco, all sorts of things. There's this one group, this community where they had giant stone tablets served as the money for those people. I think they're called the yak, I believe, or the yap. Okay, so lots of different examples of all sorts of things serving as money. But of course, gold and silver are the preeminent market money from the days of commodity monies. And so I had a little section on why is that, all right? And I said, well, there's some, if you think about it, you just think through what sorts of attributes would a commodity money want to have to make it a good medium of exchange. So these attributes I'm about to go through, they're not the definition of money. The definition of money in the framework I was using was a medium of exchange that's nearly universally accepted within a certain community. That's what it would mean for something to be a money to those people. Okay. But now when I'm saying, why is it that some goods become adopted as a money, whereas other ones don't? Here's some considerations. So for one thing, they should be durable. All right. So cattle are not good money for that reason, right? Because they can die. They should be easily divisible. That's another reason cattle don't work. It's not, if you want to buy something that's half a steer, you just say, oh, here, let me just cut the thing in half, and then you keep it like that. That doesn't work very well. They should be homogeneous. All right. So that's why diamonds, although they're very valuable, and I think Mises called them secondary media of exchange, they actually don't work well as the money, right? Because a pound of diamonds is not a pound of diamonds, right? If you have one huge diamond, that is more valuable than if you have 20 smaller diamonds that have the same weight. And also, two diamonds that are even the same size, they can have different qualities and purity and whatnot. And, one could just be worth more, right? So diamonds are not interchangeable. Whereas if you have an ounce of gold, and it's not diluted with base metals, an ounce of gold is an ounce of gold. And so that's, you can take a bunch of gold objects and melt them down and then stamp them into coins or whatever you want to do, put them into bars, and you're fine. Whereas you can't just, again, take like a pile of emeralds or rubies or diamonds and just melt it down and put them together and then stamp them into ruby coins. That doesn't work, right? So that's why gold and silver are really good in that respect. Ease of transport is another consideration. So that's why actually those giant stone tablets weren't very good form of money, because you can't move a giant stone tablet around very easily. And then the last one I discussed was a convenient market value for their unit weight. And so that's why gold and silver were the primary coins in terms of commerce, whereas you didn't have like platinum coins, right? Because platinum hits a bunch of those other ones, but it was actually too scarce, right? That for the, so the way it would happen in practice is gold coins had a high value, and so they were useful for large purchases, whereas the silver coins were of lower value, and so they were good for smaller purchases or like to make change, right? So in theory, you could have a platinum coin, but the point is that wouldn't have been useful, right? That there would be so few transactions, or the amount of platinum, you'd have to put such a small amount of platinum into a disc diluted with like a baser metal or whatever, just to, to keep the thing convenient and whatever, and then it wouldn't snap on you or whatnot. That would be too difficult to do. to make it convenient, whereas gold and silver were in the sweet spots. Whereas bronze, yeah, you could have, or copper, right? Those weren't in the sweet spots in terms of silver and gold. And so that's why people really gravitate towards silver and gold as just being the coinage for the official money. So when you think of all those different characteristics, you could say, well, how does Bitcoin do on those metrics? So divisible, obviously, it's better than gold and silver. Durable, obviously better than gold and silver. Homogeneous, yes, at least as good as, arguably better than gold and silver. And what's interesting there too is if you want it to be, it's homogeneous. But if you don't want it to be, it doesn't have to be, right? In other words, you can go through and see, keep track of the exact history of a particular Satoshi. Whereas someone gives you a gold coin, you don't automatically know every hand through which it's passed since the thing was stamped. Okay. But if for your purposes, you don't care who's held the Satoshis, you can just ignore it. So that's what I'm saying. Like, it's almost like the perfect combination where you can treat it as homogeneous if you want, but there are also differences if you want to consider them. Whereas, again, just to go back to they're like two diamonds that are the same size, they're not necessarily interchangeable, right? That one could objectively just be a finer diamond in terms of most people's eyes. Okay. Here's the other two, it's not as obvious, right? The convenient market value for their size and ease of transport. So on one sense, you could say, well, yeah, it's really easy to transport Bitcoins. That's nothing. Like, you can just press a button and send it across the globe. Can't do that with a gold coin. Yes, and the same thing with the convenient market value. You could say I can just make it as small or as big. But here the interaction comes in, like having to pay for the transaction to be validated, right? So there is that element involved. Okay, so if the Bitcoin protocol could work without anybody having to do processing or whatnot, that would be ideal. And if you really could just costlessly send the Bitcoins around, but then obviously you would lose the security. And so, there's that trade-off there. Okay, so I'm just showing, at least on 3 of the 5 criteria that I went over in my book when I wasn't even thinking about Bitcoin at that. Later in the book, I talk about Bitcoin, but at this point, I was just given the standard economist explanation as to why gold and silver outstripped all the other commodity monies and just became the money of the world back in the 1800s. That at least 3 of those apply to Bitcoin. And what's also interesting about the network fees being a stumbling block, notice it's the kind of thing where they're only a problem if a lot of people want to use it, right? So there is like an inbuilt governor where in other words, if Bitcoin became so costly to transact in that, quote, nobody wanted to hold it anymore, well, then that problem would fix itself, right? It's sort of like the Yogi Berra saying, oh, that restaurant, nobody goes there anymore, it's too crowded. Like, that's a paradox. Right? So the same thing with Bitcoin. So that's what I'm saying. Even when we say, like, you can imagine a scenario where, like, you could imagine someone saying, Bitcoin really doesn't do so well on the ease of transportation. It kind of does. Again, that's part of the built-in charging to move it from one address to another, one wallet to another. That is really just a market price. That's not really because of some intrinsic difficulty in doing it. It's only that, if too many people want to use it at the same time. So I'm saying even there, if you want to have that be a handicap, it's a handicap that kind of solves itself. Okay. So now that we've given that little crash course, coming full circle, does it make sense to say that this is just some fluke? To say, it's kind of weird, but there's a sense in which gold has been in a bubble for centuries. And yep, if everybody just mass adopts Bitcoin, what's going to happen? Again, we said people are in it for speculative reasons in the beginning. Prices are going to explode. But then at some point, they have to start tapering off. And then the cynics say, everyone's just going to dump it. And it's going to go back to zero. but I don't think that's what's going to happen. I think, some people might get out of it a little bit, reduce their holdings or whatever once they see that the price appreciation slows down. But at that point, Bitcoin will have grown into what the original vision was. That if everybody or just about everybody owns some, well, then now it is the perfect good to settle financial transactions. Okay. And again, if the price is too high in terms of transaction costs, then, it can be the ultimate settlement layer one, and there could be all kinds of things pyramided on top of it that are claims to it. But, whether it's the day-to-day commerce or probably more likely, unless they change the block size, it's like having massive gold bars stored in vaults around the world, and people just claim or trade claims on those bars, and only rarely do people literally take some of the bars out and ship them to a different vault somewhere. That's kind of the analogy a lot of people are using for what they think layer one Bitcoin's going to be in 20 years. Still, I think people around the world are going to own gold bars 20 years from now, even though that's the way it's going to play out. And likewise, right? So people are not going to be using gold coins necessarily to buy cups of coffee, but I still think people around the world are going to hold gold bars. And likewise, I think major institutions and households are all going to own Bitcoin. All right. And so that doesn't require constant price appreciation. That as it becomes more commonplace, it now better serves that role as being this like backup hedge against general uncertainty. People who own gold, it's not merely because they think, it's going to outperform the stock market next year or real estate. So that's why I want to get into gold now. That's not why people hold gold. They hold it as a hedge against just general uncertainty, but also specifically inflation in their own domestic currency. And so I think that's over time why people will be holding Bitcoin. So it's true, if people who had loaded up on it because of the price gains, they might unwind a bit, but that will just free it up and make it easier for other people to load up on it for purposes of hedging. So that's kind of what I see. I don't think it's going to, once the price appreciation slows down, that all of a sudden it's going to turn and just crash. Obviously, there's going to be booms and crashes along the way, but I think the general trajectory will be upward, and then it'll level off, at least in, real terms. Okay. It'll still be appreciating relative if governments are still issuing unbacked fiat currencies, paper money, or at that point, there'll probably be CBDCs. Bitcoin obviously will still appreciate every year forever against them, but it's not because of the massive adoption. Okay. So last point I'll make here is you might say, okay, but something still seems screwy, Murphy. How can it be that, as more and more people are piling into this, and certainly the early adopters, there could be a lot of people 10 years from now who are billionaires or trillionaires just because of them getting into Bitcoin now. And then, you say once we finally, reach mass penetration and global adoption, we kind of reach this new equilibrium. How did all those people get fabulously wealthy along the way? Like how does that work? I understand if somebody, like the oil example I gave, and I showed how that benefits humanity, right? If the speculators are correct, they forecast, the global price of oil is going to jump to $200 a barrel. So I want to stockpile now, even when it's 100, even when it's 120, even when it's 140. If I really think it's going to hit 200, that I'm doing a social service by doing that and just hodling the oil until finally the war breaks out, and then I unload my inventory. So that speculator, assuming the government doesn't crack down on the guy, has performed a social service. And so if he becomes wealthy from that, that makes sense. I, as a free market economist, can explain that and say, yep, you want that guy to get wealthy from doing that. If he thinks all of his wealth is going to be taken away with a, war profits tax or some sort of other thing, then he's not going to have the incentive to do that. And I just explained why we want people stockpiling oil if they correctly forecast a massive price increase due to the fundamentals, right? So you might say, what social function are the holders performing? How does it? Well, because if they're right, like right now in today's terms, if Bitcoin, quote, ought to have a market cap of 160 trillion and it's only 2.4 trillion, well, then the people who are piling into it right now and just racking their brains trying to come up with clever mechanisms in order to use leverage and to get exposure to it and provide others the ability to gain exposure who right now can't, and that all drives up the price, they're performing a social service. They're making the price reach where it should be sooner than it otherwise would. And that just gives people better information, right? It's making the market, it's fixing a mispricing in the market is one way of looking at it. And moreover, it's not just a wash. When humanity gets to the point where just about everyone owns Bitcoin, and now this is like the backup money or near money asset, that's a good thing. Humanity will definitely be wealthier in a very real sense in that framework. All right. Or to put it a different way, if you have two planets side by side, and on one of them they've discovered Bitcoin and the other one they haven't, by you telling the second planet about Bitcoin, those people will have a higher physical standard of living 20 years later than they otherwise would have if you hadn't told them about Bitcoin. Okay. And just real quickly here, because I'm over time, but to explain, you say, well, how? Like, how does using Bitcoin let us build more houses? And I'm saying it does, right? That's what I mean. When I say they have a higher standard of living, I am saying when you give Bitcoin to those people, it's like if you gave them stock markets or something, or you showed them how radios work, right? You're giving them this new technology that allows them to organize themselves more productively. And so they can actually build more houses and grow more food and so forth. So specifically, just very quickly, give you the intuition, money itself serves a social role. And again, I point you to my book, Understanding Money Mechanics, if you want to understand this and see it spelled out more carefully and slowly. But it's not just some historical coincidence that people use money. No, economists think money serves an extremely important function. Very quickly, it solves what's called the problem of the double coincidence of wants. Right? So if you just had a barter economy where, you've got a toothache, so you want to go find a dentist that can fix your tooth, and then he says, well, what's in it for me? And if you're a farmer, you say, oh, I have some tomatoes. And he says, well, I don't like tomatoes. I already had a bunch of tomatoes. I don't need them. So now you got to look for a dentist that wants tomatoes. You see how inefficient that is. And so the use of media of exchange solves that problem, where you take your tomatoes, you just trade it to somebody else who has something that, the dentist wants. And so that process happens, it bootstraps. And so eventually people start selling, the goods that they have, that they produce or services in exchange for something that they know, oh, everybody wants this thing. Right. So if I go to market with tomatoes and I have a toothache, I first sell my tomatoes for the thing that I know everybody will take. And then I go and use that to hire the dentist. Right. And so that thing that everybody accepts on one side of the trade is what money is. Right. So what the adoption of money does is it helps people better coordinate their transactions. If you prefer, it sort of splits up the timing that of the good or service that you sell into the market. You don't have to immediately buy the thing that you're going to get for it, which is what you have to do in a state of barter. Instead, when you use money, there's a sense in which you split the transactions up. You go ahead and sell your services or you sell your goods, you buy the money with them, you obtain money with them, and then you can defer when you suck real goods and services out of the system. You can just load up on money instead. Okay? So that's, obviously I'm being a little loosey-goosey here, but that's the intuition behind it. And so that allows for far more sophisticated patterns of specialization. That allows you, so the guy who grows tomatoes, if you knew when you had a toothache, you had to find a dentist who wanted the thing that you had right then at that moment, you couldn't just specialize in growing tomatoes. you would have to go into market with all sorts of stuff because you wouldn't be sure that day, what is the dentist that I find? What does he want? I better have some tomatoes on me. I better have some eggs. I better have some tobacco, right? I better learn how to sing a song because maybe he wants to hear a nice tune, right? And so that's inefficient if everybody is kind of a jack of all trades. You want people to specialize in what they're really good at because then that allows for the greatest total production, which means the greatest per capita output of various goods and services. And then so everybody specializes in what they're good at and then trades that with everybody else. And the way you facilitate all that is if there is a medium of exchange. So you just take your surplus to market, sell it all for the medium of exchange, and then you go out and buy all of the myriad things that you want using the medium of exchange. Okay. So now that I've said all that, process is debased, and I chose that word specifically, intentionally, when the government ruins the money, when the governments around the world come in and use various types of coercive measures to take over the production of money, and then they abuse that privilege by funneling it to themselves and, engaging in inflation that benefits them and their politically connected cronies. That has definite repercussions on the average person. And so, last point I'll make, if we have near global adoption of Bitcoin, that will always be a fallback, right? The governments of the world will not have as much economic power with their state-issued fiat currencies, whether they're continue to be paper or, like I say, down the road, it could be CBDCs, if everybody has Bitcoin and can fall back on that. And so that's the sense in which planet Earth will be far more productive if everybody holds Bitcoin and we can all use that, whether we literally transact with it or it's there as like an accounting device, an anchor point, and people can do contracts, which down the road will all be smart contracts and blockchain based and so forth, but using Bitcoin is like the reference point, right? And then occasionally people will actually move chunks of Bitcoin around on the layer one if the circumstances make it profitable to do so. And that kind of just keeps everything honest and calibrated. All right. So in short, not giving you investment advice. I'm just saying I think that more and more firms are going to start piling into Bitcoin. That will push the price up even more and keep it relatively more stable. Because one last thing I'll mention, as more and more firms get into it, as you get more sophisticated derivative markets with put and call options and more sophisticated things on Bitcoin and on Bitcoin ETFs and whatnot, that may introduce some volatility, but in the long run, I think that will promote stability, right? That people will see if there's some big sell-off for some reason or some algorithms all get screwy and there's some kind of unforeseen thing where they all just start selling and pushing down the price, it'll be a lot easier for other institutions now to recognize that discrepancy and say, this doesn't make sense, in rush in and buy because they think it's underpriced. And so that will stop the crash and then, bring it back and things will correct. All right. So as that happens more and more, it will be safer and safer for other institutions to start dipping their toe in. And again, you'll have this snowball of people piling into Bitcoin. It's a self-fulfilling prophecy. But it's not just the greater fool theory, like somebody like a Peter Schiff would say, that no, it really makes sense that in my mind, it would be pushing up the global price of Bitcoin to where it should be when you do have nearly universal adoption. Okay. Thanks for your attention, everybody. See you next time.